Hello guys, welcome to Pravega Civil Service Academy. We are actually starting a new initiative in the form of topic-wise analysis for Civil Services Mains Exam 2018 as well as for 2019 prelims. We are actually following a pattern in a way that we are actually choosing the important topics, especially for preparing for Civil Services Mains 2018. And I'm just analyzing on a topic-wise manner, especially with respect to the trending topics in newspaper. So I'm just starting the program with respect to the rupee depreciation, which is happening for the last so much of time, especially after just around 6 to 8 months in India. So let's start the program. So as you all know, the rupee has been depreciating for the last so much of time, especially after the 2018 January onwards, where we have actually slumped around 15 to 20%. So this slump has taken place. So the rupee has actually slumped to a level of around 69.95 a dollar in the last week, that is on June the last week. So let us look at what are the reasons behind such kind of a move as far as rupee depreciation is concerned. So the first and the foremost factor which I would like to highlight is that the capital outflow has been taking place in the Indian stock market, in the Indian bond market, as well as in the Indian Dutch market ever since 2018 February, March. Okay. So that is the first important point. The FPI, see, as per the RBI data, see, if you look at the RBI data, we can understand one thing that, see, around $9.8 billion has been pulled out from the Indian stock market as well as from the bond markets by the foreign portfolio investors ever since March. See, that is a worrying tendency which you have to understand. Even the economic survey has actually pointed out the same, that there will be a capital outflow from the economy. This year. So that is now actually happening. It's a fact. So the second important aspect which I would like to say with respect to the rupee depreciation factor is concerned is with respect to the trade war tensions between United States and China. There has been a steady war between tariff war has been taking place between China and the United States. United States has imposed tariffs on Chinese products like steel and aluminium to a scale of around 25 to 100%. China has made a counter action in the form of imposing tariffs on US products of around $150 billion. So that is actually creating a global worry as far as economy is concerned. The global economy is concerned, there is a worry is going on in the total market. That's another important factor. And the third important factor is with respect to the crude import of India, the crude oil import. We are actually an import dependent country as far as crude is concerned. The crude price has been steadily increasing ever since 2017 onwards. Because as you all know, because right from 2014 to 2017 mid, there was no such problem as far as crude is concerned, because it was hovering around $40 to $45 a barrel Brent crude. So this has actually stopped. So it has shown an upward direction right now because the factors like the Iran issue, as you all know, the US-Iran deal has been quashed by the Trump administration. And the second important aspect is that the OPEC has actually started this decreasing the level of production of crude. So these has actually contributed to the crude oil price hike in our country. So that's another important factor. And you have to understand one thing is that, see, the dollar itself is strengthening over a period of time after 2016. Federal Reserve decisions especially you can understand that the quantitative easing and all. The Federal Reserve has been pursuing a quantitative easing, easy money policy in US, the bond purchase and all. They have actually stopped it, and they are now moving on a path of higher interest rates. The Federal Reserve has been increasing the interest rates of interest rates in the United States. So what happens is that the FPIs are now seeing United States itself has a safe economy compared with that of emerging market economies, where there is a chance of risk involved. So that is the other important factor, and even some other small issues like the gold import in India, because we are actually we have actually imposed a gold import way back in 2013, which was actually relaxed after 2014. Now the gold import has actually started moving up. So that is the other important factor. So these are all the factors responsible for rupee depreciation in the country is concerned. And we have to understand one thing, that it is more or less global factors rather than domestic factors which is responsible for rupee depreciation in the country right now. See, if you look at the 2013 issue, where we are actually considered to be fragile five. Fragile fives are those countries, or those 5 countries where their emerging market economies currencies as considered to be more vulnerable to the global shocks, etc. So right now the issue is not with domestic issues like that what's happened in 2013. Now the issue is with global issues mostly. So that is beyond our control. But again, that has to be curtailed. So let us now analyze the implications, the positive as well as the negative implications of the rupee depreciation. So first of all, the positive aspect is that our export competitiveness will be improved, because we will be getting much more export earnings. We will be getting much more export earnings. Our sectors like IT, ITES sectors, gems and jewelry, engineering sectors, etc., automobile sector, etc., that will have a good impact, especially the Make in India initiatives that are going on. So definitely that will have a good impact, but we have to be at that point we have to be export oriented country, and understand our export competitiveness has to be improved. That's the case. And coming to the negative aspect of this one is that, as I told earlier, we are actually an import dependent country, especially for crude is concerned. So automatically we have to make dollar payments. So if we start dollar payments, automatically rupee will depreciate. That is the first important point, because 80% of the total crude is we are actually importing domestic demand for the domestic demand from West Asia and from Africa. And the second important aspect is with respect to the inflation aspect. The inflation may go up. See, that has been seeing in the last 1 year also, the retail as well as the wholesale inflation has been steadily improving in India. That will have a negative impact on the credit policy also, because Reserve Bank of India will start increasing the key policy rates, which will have a direct impact on the investment cycle. So automatically the investments has to be postponed to further dates. So that is the other issue. So these are the negative implications as far as rupee depreciation is concerned. So let us now look at the way forward, or the solutions for us to go ahead. So the most important one which we have to do in the short term is that Reserve Bank of India, which is the central bank of our country, has to sell the dollars from their kitty. Because Reserve Bank of India has a cushion of around $410 billion right now, as far as June 15th figure is concerned. So we can actually sell the dollars in the Reserve Bank of India kitty. Hence, the dollar availability can be increased and the rupee appreciation can be made. And in the medium to long term, we can make initiatives like we can improve the competitiveness of our industry. We can improve the export markets, we can diversify the export markets, and we can do one thing like we can improve the macroeconomic fundamentals of the country. Also, we have got the other issues like we can improve the gold import levels, because gold import level has to be curtailed to a significant level. The NRI remittances has to be improved. Because you know one thing that, ever since 2012, the NRI remittances from outside has been a significant portion in our remittances part. It's around $60 billion every year, which is not a small thing. And even the FDI, we have to attract the FDI. The policies like Make in India, Skill India, and even the Digital India, etc. is very good initiatives. So we can attract FDI in this matter. So these are the things which we can actually do to improve the rupee is concerned, to to make it rupee more susceptible to vulnerabilities. And see, I must conclude with something like, see, rupee depreciation is not something problematic issue. You have to understand that also, because rupee depreciation, see, a bandwidth of 59 to 64 is somewhat considered to be a very good one as far as a rupee value is concerned, as per our former finance minister P. Chidambaram is concerned. So these are all things as far as rupee depreciation is concerned. I'm just winding up the video. Do share your thoughts, comments, everything on the below text box button, and do subscribe to our video. So let's hope for the best. All the best, guys. Thank you.